Good morning, guys. Okay, I think we're good to go. Good morning, guys. Welcome to another video brought to you by Total Control Traders. So, with today's market, what are we looking at? Before we get into the market today, there's one thing I wanted to note. If you are interested in joining our trading chat room, where charts are reviewed live and trading ideas are shared, as well as my personal trades callouts are all in there. The trial for that is ending at the end of today, so make sure to check it out. But in the meantime, the YouTube 100 subscription special is still there. Make sure to enter YT100 on your order to receive 20% off memberships. All right, let's get into it. Yeah, we lost the one viewer we had. All right, NAS. Right now, it is bear flagging on the 5 minutes. Chart is still relatively weak. Let's get into the hourly. So 5 o'clock, we saw a decent drop. Now the hourly is a little bit extended from the hourly 8. Getting into that oversold territory. With an hourly bull divergence that has formed now. Okay. So there's an hourly bull divergence right now on the NAS, but not seeing too much of a bounce yet. Reminder, SPX has rejected from new all-time high, potentially breakout, fake out. We're going to need a little bit more price action to determine what this actually is, whether it's just a temporary pullback. Essentially right now on the hourly is still just making a higher low, so there is no major concern as of yet. On the 30-minute, the trend did change to the bears. Lower low. Yeah, lower low, lower high. And then essentially this is one move to lower low again. On the hourly, no trend change yet. NAS, however, is a key that should be noticed, that should be noted, where we rejected from. So, if you didn't watch yesterday's video, I discussed how this could potentially be the temporary top. Could also be, now consider this scenario, could also be the beginning of the dragged out consolidation that we've been talking about. Where we rejected from NAS, it's a little bit too perfect. GP, inconfluence with key zone. From there, it was just straight sell off so far. We have not gone over the hourly 8. This one's very, very slightly, but immediately sold off. So we have not gone over the hourly 8 on NAS yet. Chart is weak. Now let's take a look at what VIX is doing today. So we're bouncing from the lower trend line of the wedge. We were extended from the daily 8. This key zone would be where I'm watching for that first bounce. It's right around the upper trend line of the wedge. So let's see if we get a move up there. US dollars slowly increasing, but not convincing. So with US dollars having potentially being in the channel, and we can see key rejections here, there is a chance that this is just higher low there's also a chance that this is the beginning of the consolidation. Now, there's no clear direction yet. The message I sent out to the chat room this morning is we will likely have a much clearer direction over the next few days going into the beginning of next week. So be extra light on your feet. What that means is two things: light on your positions, be agile on your trades. Exercise extra caution because there is no clear direction in the market as of now. Essentially, if you were to look at this NAS on the 4 hours, it is still in an uptrend. Must hold zone would be this 0.5 for bulls to hold that 4-hour trend that we had so much trouble to obtain. Right around here, 12,764 is the key zone to hold. We're going to want to hold this higher low. All right, so we got a couple ticker requests from the trading chat room. Let's take a look at them. First one, KOSS. Okay, it's not looking so great on the 4 hour. On the daily still looks okay. It's actually gapping up. When I last checked, when I last checked, it wasn't gapping up. Maybe it's changed now. So as long as that daily 8 as well as the Wednesday's low hold, the chart still looks great to me. ABCD pattern still in play. This has just been a cooling off, waiting for that daily 8 to catch up before the next leg up. The next leg up after a break of 35, I'll be looking around that 60 zone. Yeah, 58 to 60 zone. So your patience, if the move begins to show up today, and sometime today, tomorrow, I will be making a decision on KOSS based on the volume, what's been happening on the decreasing bear volume. A move should be coming. So today's Wednesday, right? Yeah, today, tomorrow, maybe Friday, I will be making a decision on KOSS. I want to see that move come in over the next 2 days, ideally. I don't really want to see it dragged out into Friday. So let's keep an eye on it. The next move up, your patience should be paid. There is a lack of resistance after 35. Looking nice. Next, Apple. Morning, guys. All right, Apple, key rejection from the 0.382, which lined up with the key zone. Previous support here, and then more supports here. A little bit of rejection here. So from here, I would imagine, oh, okay, never mind. I was going to say more price action downwards, and we are already seeing that big gap down into the 123 from the close of 125. Nearly $2 gap down, 1.37%. So to me, what I'm looking at now, the reason why I've switched to playing bears. Morning, DG. Nice to see you again. The reason why I've switched to playing bears now is because when you look at this on a daily bull divergence, personally, I would anticipate more of a decent follow through. However, we didn't even make a higher high. We didn't even get to the 0.5. Instead, we rejected from 0.382. That shows me weakness on the daily bull divergence. Now, any sort of daily divergence, not to mention weekly divergences or monthly divergences, those are rare because of how not only the time frame that they're based off of forming and whatnot. But when you see daily, weekly, monthly divergences, be very cautious of it. Have it in the back of your mind as you're trading. With this kind of daily divergence and lack of follow through, that is a red flag for me. So I will be cautious on the re-entry on Apple. I want to see the whole market move first. Right now, NAS is still bear flagging on the 5 minutes. Tech, because of how tech has bounced a whole lot more over the last 7 days, 8.9% versus SPX. 7 days, I think, is over here. No. 6.7? That doesn't sound right. Oh, there we go. Okay. So since March 9th, 5 days is about 8%. March 9th. 5 days, there we go. So tech has bounced double of what SPX had done. And because it had pulled back more than SPX, the bounce is going to be more. But then now it's reversed. Because the bounce has been more, the downside would also be more. Now, if we're looking at the market today, NAS is down 1.15%. SPX is down 0.42%. So NAS is obviously a lot more volatile. Right now, about 2 times more volatile than SPX. Remember this. This is a cherry picking environment. You are going to see, lately I've noticed that a lot of SPX, NAS, whichever one it is, it's been moving, but a lot of the tickers that we are watching, they have not been moving. So it is a cherry picking environment. You're going to need to find that right ticker, or else the easy way to do this, consider ETFs. Now on this most recent move down, when I switched to bears, I didn't consider that NAS had bounced more, so there's more downside potential to NAS. But what I considered was SPX has ran quite a bit more. And, well, SPX is at a new all-time high. And as well as this chart. Now remember to have this chart on your top watch. QQQ over IWM. If you look on the weekly or even the monthly chart, you can see double rejection, double top, 1 cent. 1%, no, 0.01% off QQQ over IWM. Okay, and on the weekly, you can see that we were extended from the weekly 8, as well as this lower trend line that we're bouncing from. There was 2 potential, depending on how you draw the trend line, but it looks like we were having the bounce from that first trend line. So this is why I went with SPXS, which is the 3 times leverage of SPX bear play, versus SQQQ, which is the 3 times leverage of QQQ bear plays. And because I was looking at this, I was thinking that QQQ still had a little bit more upside to that weekly 8 versus SPX. So went with SPX, but to my surprise, NAS is more than double to the downside of SPX. Regardless, profit is still profit, right? So this environment remains cherry picking environment. It is extra hard, whether if you are bears or bulls, to make money. You're gonna need to find that right ticker, or else just play ETF. So much easier. Okay. All right. Let's cover. Let's try to find some interesting tickers. I'm seeing a lot of red. Of course, it's given that the market is down. All right, so one thing I wanted to mention. So I picked up this play on Monday. Yeah, on Monday I picked up this play, Alibaba. Saw a hold. I was looking for a hold of this trend line, long-term trend line, since the March 20s low Oh, I am on the weekly chart. There we go. You can see key hold, and then on Monday, we were looking at a potential key hold again. So we did hold that. We closed that high of day. Then we gapped down open and sold off. This ticker continues to be annoying as hell. So Alibaba going on permaban list. Never looking at it again until something exciting happening. The last time I was looking at this chart and decided not to play it was this very nice setup of an inverse head and shoulders that ultimately, thank God I didn't play it because it did not get any follow through. This ticker, because it's dual traded, well, one of the main reasons, because it's dual traded, it is extra hard to trade. It doesn't react to the normal behavior of a stock that you generally see. Upon a bounce from a trend line close near the high of day, normal people would anticipate a gap up open and continuation. However, we got the reverse, gap down and sell off. So note that tickers that are traded dual listed, whether if they're China stocks, other country stocks, they are going to be affected by both sides. So that's one extra variable into the ticker itself. Baba going on permaban. We are still holding that key zone, but essentially we lost the trend line. You could say that the trend line is still there if you use this one. But yeah, not gonna touch it. So that's just an example of what happens when you're trading dual listed tickers. And today, even if you were to look at the reason why I decided to swing this from Monday, I think I got in right on this candle. Not because I nailed the bottom, but it's actually because I was reading the chart wrong. I can't remember what time frame it was. Every now and then when you use different time frames, the trend line will move a little bit. So when I was looking at this trend line, it might have been the 4 hours, something like that. I was looking for a hold, but essentially it was trading down under the trend line. But then I was looking for a hold, so I got in on this candle. Then from there, it's just been a move straight up with a high bull volume close near that high of day. So I was confident to swing this, and then gap down open, slow buy up, rejection from that. There it is. Rejection from this previous support and just straight sell off. Then yesterday end of day, 15-minute, big bull volume showed up again. But regardless, we'll not be looking at this chart again. You guys have any tickers you want to review? I'm going to take a look. APHA. So my top watches for the remainder of the week, just going to quickly go over those. First one, APHA. This remains on top watch. We took profit. Yeah, we took profit around, I can't remember if this candle or this candle. One of these two candles. Took profit there, half of them, half of the profit. But still low bear volume in comparison, aside from this candlestick yesterday morning. Now we are looking for a higher low. And this is potentially where I'm looking for that higher low. The 0.5 lining up with the previous trend line from the channel. That's been keeping us down 1, 2, 3 times. So I'm looking for a back test of this trend line. If that higher low is found, I will be going in, depending on the reaction over there, I will be going in, adding to the position. Right now, we are there might be a good dip buying opportunity in the morning, actually. because we're gapping down into that 1923, straight gap down into the 0.382, while we are extended from the hourly 8. There could be a bounce opportunity for those of you who are interested. Let's take a look at the shorter time frames. So 30-minute and below should begin to see oversold conditions. Watch for the divergences. Okay, it doesn't look like there's going to be a divergence, but 30-minute is in the oversold condition. Now reminder, don't ever trade on oversold conditions. Watch for the divergences and trade from there. Potential opportunity for a bounce play on APHA. Let's take a look at shop. It's not something I watch on shop, but it is a holding in my long-term investments. Okay, so there were two potential trend lines that I was looking at. One, this being the lower trend line, this being the upper trend line. And we did see a bounce from here. Essentially is a daily bear flag right now. We have not closed over that daily 8 yet. This is very slight close over, but got sold off right after. So shop, generally I would look at it from a more longer time frame perspective. Perfect rejection from the top. Actually, this one's not even right. It should be right over there. Yeah, perfect rejection from the top. And I wonder if there's a channel forming. So we had a channel, but it looks like on the weekly, the chart wants to break down under now. So must hold would be this confluence. Right now there is a chance of seeing a bounce. Of course, it's going to depending on what the market does. From here, this confluence zone, if we were to slowly grind down and then have a big drop right here, I would anticipate a bounce from this area. One-to-one extension has been met. It's sort of in the middle, no trading zone. Watch for the market. Shop sometimes likes to do its own thing, but as the way it stands, I believe it's gonna be more so depending on the market. The bounce has been a little bit weaker versus the bounce has been a little bit weaker versus what NAS has been doing, because NAS is already trading over that 88 versus shop it's not. So something to keep in mind. The other top watch that I'm going to be watching is Score. Already in position, in the core position, but I'm going to be watching for that higher low. So this head and shoulders pattern with the neckline being here has played out. We saw follow through straight into GP. That was a beautiful bounce. GP bounce, GP hold from the beginning of the move to the top of the move. Hope somebody got in here. It was not on my top watch. There's too many things going on at the time. So I'm watching for that higher low for a potential of inverse head and shoulders play. Now remember, this inverse head and shoulders is on daily time frame, meaning that it is going to take some time for this right shoulder to form. Ideally, what I want to see is a hold of the 0.5 or stronger. GP would actually make sense too. Yeah, let's see a hold of that GP. That would be a nice entry. Nice entry or addition onto our core position. Right around 28.78 to 29.22. And what's the other ones I'm watching? The other ones I will be watching going into end of the week are all the vaccine plays. They're all pulling back because they ran fairly decently. I didn't catch this last move, which is beautiful. I think we were in it from, where was it? We're in this play for quite a long time. October. Somewhere around October, November, December that we got in. So we caught majority of the move, but missed this last part of the move, which is fine because now we are seeing a rejection from the key zone. This is going to be a big key zone because of weekly chart, but you can see previous support, multiple supports here, and we are seeing a rejection. First, we are going to be watching that gap fill, which is happening right now. We're gapping down today, so there's a chance that we're going to have a slight move up first to fill that top gap before dropping further to fill that actual gap. Then from there, would watch for continuation of price action downwards, slight daily bear divergence on AAL. Gonna watch for an entry on this play. Now this play is gonna be longer time frame play, so I'm not gonna be worrying about price actions in between. We'll be using the longer time frame. GP, oh, that would be beautiful. If we were to retest the GP or retrace back to the GP, it would also retest this previous key zone. Not too much happening here. A little bit of rejection. Broke over, found support, multiple rejections on the upper part of the zone. So this part makes sense. If we were to see revisit 1642 GP area in confluence, that would be amazing entry. Keep AAL on your top watch. Maybe not for the next little while, but 1, 2, 3. Yeah, I'd say probably give it 2 weeks. See where the consolidation goes. The other one is AC Suncor. Quickly go over ABNB. Avoid for now. We'll go over ABNB too. That is on my top watch. Oh, I'm looking at the wrong thing. So he broke over the key zone. I actually don't like how these two zones are drawn, but regardless, it actually does make sense. Okay, so we broke over the key zone. Now we're gonna need to see where the retracement goes to. So same idea. This is gonna be a weekly play or a long-term play. GP lines up with previous resistance. Really lines up with previous resistance. So that would be the most ideal re-entry. 23.55 on AC. Suncor is the other one I want to see. Now that all of these are pulling back, take them as opportunity. Have your targets ready. Know where you want to enter. And where your ads are going to be. GP makes sense too. Would be top of the zone. So GP of the most recent move, right around 24 on Suncor. And let's take a look at ABNB. Okay, that's interesting. NAS is bouncing a little bit. As of right now, NAS is bouncing a little bit more, where SPX is still pulling back. Sorry, looks like streaming service went out of went out of service. Okay, so Airbnb, what we were looking for was that inverse head and shoulders. However, that has been negated now. So back here, we're looking at the head and shoulders formation. Oh. Shoulder, head, shoulder, with neckline trending up. Makes sense. We broke the neckline, saw follow through, bounced from the GP. That was amazing. We got into this play and sold under the support resistance, right around that 190 zone, and then it kept running. The chart was strong. There was lack of sellers. You can clearly see that from the volume here. Lack of bear volume, decent bull volume. And now we failed to break over that key resistance 214.07. We did have a break, but there's breakout fake out. So on the daily, we were looking for this inverse head and shoulders. It was such a beautiful setup, but what happened now is because of this little wick, it's no longer in play. Essentially, because of this wick, the trend is already reversed to the bulls. Inverse head and shoulders is a reversal play on bear trend. Because the trend has reversed to bulls, is no longer a valid head and shoulder play. You can look for something similar. You know, there might be a similar play in here, but it can't be called an inverse head and shoulders anymore. So now key is to watch for where the pullback's gonna be. And the reason why I love playing ABNB is not only because it's personally I consider it to be a vaccine play. I don't think this is valid anymore. Yeah, personally I consider it to be a vaccine play, but also because of how well it respects the fibs. GP 1-to-1 extension, touch both of them before a huge bounce. We got our entry at about the 167, 168 zone. And then from there was a decent return. We only got half of the move, but regardless, given the market condition, profit's profit. Now from here, if we're looking at GP retracement, there is somewhat of a zone in here. So let's move this up. Oh, this is kind of annoying. Okay. Can't find something too clear. There. There's too many supports and resistance around this area. What you could consider doing is just make the zone bigger. So let's see how that works. Rejection, rejections, still works as support because we didn't move that lower part. Upper part, it's gonna be somewhere around there for the ideal entry. 0.5 does also line up with here. Some supports and resistances around that 0.5. Rejection here. Nothing too much over here. Support, broke under, support again, rejection, double rejection. So 187 could be another entry. Based on how much we're selling off, the pure crazy rejection that we have seen so far on ABNB from that previous high of 214, I would anticipate at the very minimum a pullback to the 0.5. GP, ideal first entry. In the current environment, remember, try to play for ideal entries. If not, it's okay to save cash. Cash is a position. If the market were to pull back, your US dollars are going up, likely gonna go up, meaning that you are still making gains via your cash position. Don't forget to give a thumbs up. I think we're gonna end the video here today. Do some preparations. Make sure you are prepared for today's market. Looking a little bit more bearish, but it's gonna depend on what powwow says. So watch powwow as well. Friday is OPEC's option expiry for the monthly options. Likely to see increased volatility on the remainder of the week. If you're looking to build that pot of gold and enjoy the content that we provide, the best reference you can give is by spreading the word about our channel. We provide new videos daily, and make sure to check out our website and Twitter. Website at totalcontroltraders.com, Twitter at _TCTraders_. Today is the last day of our free trial. Make sure to check it out. It will be gone by end of day. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.